Good evening, everybody. Welcome to our session tonight, where we talk about SGX or SGX related stocks, and of course, how you're going to get an edge investing in Singapore. So we have I have some very exciting, news to share with you guys, and also I'm going to show you guys a little bit in a while how you're going to use a tool that we've actually developed that's absolutely free that you can actually use if you are looking at SGX stocks, or you're looking to invest in SGX stocks. Now, before I begin, can I just do a mic check? If I can get a hello or a link, it is the eve, the weekend or the week before Chinese New Year. So I think a lot of you are probably out there shopping, doing your last minute shopping. 1 week from now is, it's going to be a very long weekend, I think, for most of you, especially if you're dialing in from Singapore or Malaysia. Can I just get a mic check that you guys can hear me okay before I continue? So I'm also colored red for this occasion here for tonight. All right. If you can say hello in the comment, that would be great before we begin. All right. So. All right, Kelly. Hi, Kelly. Happy New Year. 恭喜发财. All right. So thanks for that. So if you guys can hear, just put a comment in the box below. All right. Now, so tonight, we've actually been working on something, in the last 6 to 8 months, and really we're trying to bring you guys at Equities Tracker a lot better tools, right, out there that we think, right, to actually help you make better informed investing decisions. So one of the things that I do want to share, I'm going to just quickly share my screen right here. Okay. If you go to equitiestracker.com right now, you're going to realize there is a little link on top that says SGX stocks. So if you actually click on that, or you can go directly into the website directly. Now, it's absolutely free. You can go from your browser or your phone, although I do recommend that you go through your laptop or your desktop, just because there's sheer amount of information that's actually in there. Before I continue, actually, you'll realize and notice on a pop-up on my screen here, you're going to see that there is a special here. So for those of you who actually are interested in SGX programs, SGX, the stock exchange, actually has an academy, right? And you're actually going to get 50% off on any of their courses here. Just use the discount code here that says ETSGX 50%, right, with the percentage sign, right? So you can do that. So in this session, I'm going to keep it a bit free form. So if you guys have any questions, I'd love to answer them, or you want me to look at any companies in Singapore, please put it in the comment section below. I'm actually going to show you guys how you're going to be able to use this very, very quickly to size up a company really in less than 3 minutes. Now, of course, once you land on this page, of course, there's a disclaimer. You just have to agree. Your cookies and everything is there as well, right? Now, actually, the moment you land here, right, you're gonna realize straight away that you're gonna be selected, 2 options here. Now, so this is really kind of version 1 for us. In fact, after New Year, we have some new upgrades that are being planned in here as well. So you're gonna see more cool stuff here, and of course, all this is absolutely free for you guys to use, right? I think if you look at the SGX market, there is absolutely no way that you can ignore the REITs market, because the REITs market, in comparison to Malaysia, it is fairly large, or like a lot larger than, or actually a lot more choices, right? In Malaysia, you're probably looking at 15 or 16. In Singapore, you're looking at close to 40 REITs, right? So if you want to really dive deep into REITs, you can use this tool right here, and I'm just going to give you an idea, right? Yongfat, okay, good evening. Kelly, the hourglass. Okay, so I'll share something with you as well regarding the hourglass as well, or the timepiece industry as well. So if you guys want me to look at any Singapore company, just put it in the comment section below. And don't forget, we actually do have a Facebook group dedicated specifically for SGX stocks only. So you actually just search for SGX Campus on Facebook. Just click in and join. And that's where we're going to share a little bit more about anything SGX related in there as well. Okay. Yongfat, you can't log on to our YouTube because it seems to be a problem. Facebook, no problem. I can still see you. You can still ask me questions. Today really it's about diving a little bit deeper, giving you guys a tool that you can use, and of course, just a little bit of education as well, so that you guys become better informed investors, right? Now, so if you look at the REITs section here, you're gonna realize that on the top here it's either strategies or REITs, right? Now, I'm gonna talk a little bit more about strategies later. But if you look at the REITs very specifically, if you click on the REITs, now what immediately springs to mind here is this, right? So I want you to imagine that you're looking for yields, right? So if you're investing in REITs, you don't like a lot of volatility, but you're actually looking for yields, right? So maybe you have some money in fixed deposit and you say, look, I'm getting a very low amount. But I guess some good news for the savers now, because interest rates are now starting to move up, right? To counter inflation. I think Singapore today recently announced as well some measures, right, to control inflation and increase rates a little bit more. But generally, rates compared to Malaysia has been low, much lower than Malaysia, right? Because Singapore is very much a capital importer, if I can put it right, rather than a capital exporter. Now, so if you look at it straight away, if you go to REITs, now you actually have two options, right? So assuming that you know the REIT that you actually want to look at, you can actually come them, right? You can compare, this is quite popular, Sendas and say, CDL, for example. So you can actually select two REITs that you want to compare side by side. Exactly like if you were buying an iPhone, you want to compare iPhone X, or you want to compare iPhone 11 versus the 12, right, or 13, right? So it's similar. So assuming you already know them, you can very quickly compare them here, right? So you can actually compare what's their year-to-date return for both of them, right? And we actually started this website with only 3 years of data. As we move along now, we're coming to 2022, we're actually going to add more and more data into this website, right? So you actually straight away, you're going to see here, Ascenders on the left, actually the occupancy rate is 91%, right? And for CDL, you're looking at 50%. So straight off the bat, you're going to see if you're looking at REITs, ultimately REITs is a proxy for you to get yields, right? And how do these REITs or real estate investment trusts actually get returns, or how do they earn an income? Through rental, right? Through rental of physical properties. So obviously, occupancy rate is a very, very key measure here to determine how sustainable or how likely are they going to pay more, or more. Actually, you look at it, is are they actually likely going to pay even less dividends from their previous years, right? So it'll give you very simple details, right? So one is an industrial type, one is hospitality. You can see this market cap is actually very, very small. Ascot here, and Ascendas is actually 15 billion. So you get to see straight away, side by side, you can compare, right? So never just use the stock price, because stock price can be quite misleading, because you got to look at the stock price multiplied by the number of shares, right? So you can see as well that Ascendas is actually very well diversified. It's got over 200 properties here, and Ascot has 18. Also, to give you an idea how big it is, right, in terms of net lettable area, so it's 44.28 million square feet, okay? And of course, how much revenue they make per over their net lettable area, so it's about $1 billion, right? And of course, you can look at the gearing ratio as well, right? Now, the higher the gearing ratio, which means that they are borrowing more, right? So a lot of these REITs can leverage as well. So the rule of thumb here is about 50%, right? So which means that if they have 100 million, they can go up to maximum 150 million. So they can take on more debt, okay? So because they take income as well, that income can actually pay off the interest as well. So obviously, the lower the gearing ratio, the better. Or if the gearing ratio is very low, it gives you an idea on the potential of upside as well, right? Of properties that they can acquire to generate even more return for you. So this is just very quickly, right? So if you know them, you can size it up very quickly, right? So if I, of course, you can select other ones here, and of course, you can select other ones, right? Now, that's assuming that you already know what they are, right? But assuming that you have absolutely no clue, right? You're saying, you know what, I want to get involved with REITs, especially in Singapore, right? But what do I look at, right? So data center is a very hot one. For example, you can browse by sector. Retail, right? I think healthcare, so retail, shopping malls, generally shopping malls, right? Healthcare, which is hospitals, right? You have diversified REITs as well. That means no specific sector, right? They're quite widely diversified. This makes it a little bit harder to look at, but it's also safer as well, right? In a way, it's safer because they're spread out across different sectors. Then, of course, you have office buildings, and then you have industrial as well, right? So, so you can actually look at the sectors here, which gives you the highest right now, right? Now, we have to remember these are all historical numbers. So even though retail now, on average, the whole sector on average gives you a high return, likely it could be, now remember, yield is your dividend divided by your price, right, to give you your yield. So it can either mean that the dividends have gone up tremendously, or the prices actually have come down tremendously, right? So in this case for retail, I think retail, because of COVID, has been battered quite badly. So some prices actually come down. But in all, you can actually, if you take out the outlier here, you're looking at offices doing about 6.4%, diversified about 6%, healthcare 5.8%, hospitality about 5.5%, industrial 5.5%, and data center 2.8%, right? So if you think about why is data center the lowest, one of the reasons, actually, if you dig a bit further, you're going to realize that these data center REITs actually have gone through a roof because of COVID as well. So everyone's chasing this, so the price has gone up quite a fair bit. Therefore, its yields have dropped, right? So, if you are trying to build a portfolio on REITs, for example, this would be a very, very good site for you to get started, really, right? To start building a portfolio of consistent returns. So I'm going to go a bit deeper as well. Now, of course, these are the top 10 highest yield REITs as well. You can see this is a little bit of an outlier because it's 106%, right? But of course, this is a one-off situation. I think more realistic here, you can see some hospitalities look at historical rates of 12%. First REIT here 9%. Easy World REIT 9%, and so on and so forth. So you can actually go by by ranking as well, either by sector, or you can go specifically by stocks as well. Now, I would prefer to actually take a combination of both, right? Look at the sectors that I do like. We can go and dive deep a little bit. And then look at the percentage, because you're trying to build a basket of stocks that give you consistent returns, right? Remember, REIT investors are really looking for higher than average fixed deposit returns, for example, right? And those who do like real estate as well. So just to give an idea, now, for those of you who are actually already have REITs in your portfolio, and you're saying, I have trouble keeping track of what dividends are when, right? So you're going to realize here that what we've done here is we have actually updated the site, where you actually get to see which are the latest REITs that have actually announced dividends as well, right? So in this case, this was in December, right? Dividend per share, what's the yield, right? So remember, REITs can actually pay you up to 4 times a year, right? Sometimes most of them do twice a year, right? So this yield is based on the current share price, right? And the dividend that was paid out here, right? So you're going to realize that it's not 2.2%. So you have to look at this REIT here and add up for a year what you get in terms of percentage, right? So this is really all the dividends for you to track actually here. So it's a very simple one. Jitinder, welcome, right? Okay, so really, just to give you an idea, that's how you look at now. So assuming that we do look at, we actually do look at a REIT here, for example. If I go into a sector specifically and I say, look, I want to check out industrial REITs, okay? there are total 9 REITs that I can choose from here. So if you can look at the top right, okay, and out of these 9 REITs, 653, there are a total of 653 properties, right? Now, I guess one of the amazing things about REITs is that, with a very small amount, you could actually invest, diversify yourself across properties. And of course, if you're in traditional property, and you own one directly, you're going to realize transaction costs are fairly high. Time to liquidation is fairly high, but if you trade it through REITs, it's a lot quicker, right? So you can see that actually industrial REITs, the average occupancy rate is 92%. So largely quite unaffected by COVID, right? We also show you rental growth year on year. So actually in the pandemic, there was actually growth in this sector as well, right? We were quite, you'd be quite surprised. So on average, of the 9, the average net asset value or the size of each REIT is about $3 billion, right? Now, so one of the things that if you want to look at this, you said, look, I'm looking at industrial REITs. I want to dig a little bit further. So straight away, this is already ranked by for you in terms of REITs, which one gives you the highest returns, right? So obviously you're looking at this as EC World REIT 9%, right? Let me check out what it is. So if I click on the EC World REIT, straight away, it's actually going to bring me to the profile page of the REIT itself, right? So you can actually read about it. It's listed on in 2016. It's a REIT diversified, right? Primarily for e-commerce, supply chain management, and logistics purposes, right? With geographical focus in PRC, right? So now, if you do like the e-commerce game, you think that it's going to go bigger, right? So this could give you exposure into the e-commerce game, especially in around China, right? And the portfolio has an aggregate net lettable area of 960 square meters, right? And they're at 8 billion renminbi, right? So it's actually listed in several indices as well. So it's actually quite well known, right? And it's managed by EC World Asset Managers, right? Okay, so just really gives you a quick profile. You can see here actually their occupancy rate. Now, I've not seen one where you get 100%. Very rarely, unless it's only one building, for example, and it's only one tenant hospital, right? Then you get 100% occupancy rate. But generally, when you have a portfolio of properties here, right? You hardly will ever get 100% occupancy rate. But 99% is very close to 100%. So they have a total of 8 properties. The occupancy rate is 98%, and they've got 38. Now remember, your max is you're looking at a gearing ratio is about 50%. So there's probably a little bit more room for acquisitions, but really that's about it. So now I think now it's the markets should now get interesting, right? And why do I say that? Because I remember back in 2020, everyone was crazy about the stock market, right? When it was going up. But I think a lot of people are less crazy about stocks when it's coming down. But as a value investor at heart, really, that is your key, right? That is really when you should be looking at the market right now, because prices have come down. So if you look at a 1-year return, actually this share price has not moved in 1 year, right? It's only giving you a 1% return, excluding dividends, yeah. And it's fairly well traded as well. So it's actually flat, right, from last year to this year. So the current dividend yield is about 8.98%, right? So if you do believe in the long-term viability of the e-commerce business, whether pre or post-COVID, e-commerce will still survive. Perhaps this is something that you may want to look at for exposure into your portfolio, right? Now, straight away, it actually shows you your revenue segmentation. Actually, e-commerce represents about 50%, almost close to 50% of their revenue. Port logistics about 38%, and of course, others is 12.3%. So largely e-commerce and logistics. So you know this at least. Now, very quickly, if I look at this and say, hey, you know what? Let me look at 1 year. How many times did they pay, right? So it seems that they pay in March, which is in a couple of months, September, and likely December as well, right? So these are the three dates that they paid out in 2021. In 2020 it was twice, 2019 was once, and 2018 it was 4 times, right? So 4 times a year. So this will give you some sort of characteristic of the REIT itself, right? Of course, if you want to look at the full history, you can go to the next page, and it shows you, because it was only listed in 2016. Okay. Now now you also want to visualize this, right? So I'm saying, you know, the idea behind this site for you guys is something very simple, right? You know, you don't need to go through 10 years of annual reports. You know, you don't want to be taking so long to actually figure out whether I'm actually interested or not, right? If I'm interested, let's check it out, right? So largely this is located in China, so it's a Chinese REIT play, right? So I've got 8 properties in China here. In 2020, or it's everything is in China, right? So it's not so it's one geographical location, right? Its net asset value is about 700 Sing dollars. Okay. Now, if you look at their revenue over net lettable area, so their revenue actually has gone up and their net lettable area has gone up. So that means you want to see that nice curve going up, right? So what you don't want to see is revenue coming down, which is the light blue line, and net lettable going up, right? So if there's a big gap, you're going to realize, hey, you know what, this REIT is probably not growing the way I want it to grow, right? Similar to stocks as well. And of course, you can look at how their profile has changed over the last 3 years, right? 2018, 2019, 2020, right? So if you actually want to even dig very, very deep into each of the properties as well, you can actually look at here where they are located. So it's in Wuhan and Hangzhou. So if I click on this specific warehouse, right, we've even got a nice picture for you so you can picture it as well. The property statistics, where it is, you can go and Google Earth this if you like to. How much revenue they made from this property and what was their purchase price, right? You know, it's 2 4-story buildings housing e-commerce merchant offices. O2O is online to offline, right? Businesses, retail outlets, warehouse space, right? And you can see what's happening to its valuation over time, right? Of course, when we get more data, we will actually update this as well. So if they dispose it also, we will know as well, right? And you can see actually in the last 3 years, the occupancy is 100%. So I think up to this point, right, this is really our first cut. But up to this point, you actually get to start looking at REITs from a very different way, right? You're going to be a lot more data driven. You're going to start off wide and then you're going to get smaller, smaller, smaller. You can really deep dive right down into the properties as well, right? You know, thumbs up if you find that this is cool and it helps you save time, especially if you're looking at REITs. You know, give us a thumbs up or a like or hello, you know, in the comment section. But that's what this website can do for you, or this tool is really available to you, and it's absolutely free, right? So I'll come back again to the website. Now, the next thing that we have actually built on and focused on, and this is something that will continue, right, to be developed. So do check out the website and do tell your friends about it. In fact, you know, for those of you who are interested in the Singapore market, what I strongly suggest you guys do is actually join our Facebook group. You can follow our Instagram. More importantly, actually, if you have actually Telegram on your phone, right, and you just want to get updated, right? Because look, sometimes if you live in Malaysia, you're not sure what happens down south, and you want to keep updated, and you don't know where. Actually, SGX actually has an official Telegram channel, right? So all you do is click on this, Telegram. You bring you straight. You can subscribe for the Telegram channel, and updaters get followed there as well. So just to keep your pulse there, right? Not so much news, but just to keep a pulse on what's going on in the SGX market. Right, I think especially those of you who actually joined us last night for an economics forum that we had, you know, sometimes, you know, we might need to probably diversify out of ringgit, right? So, you know, SGX is our closest neighbor, probably most accessible neighbor. You know, maybe that's something that you may want to consider looking into, right? So you scroll out to the page, like our Facebook or our group, right? And very importantly, get onto the Telegram channel just to get a pulse, okay? All right, so now the second part, this one is going to be also very interesting, and we're excited to bring this to you. Now, this is not complete yet. After New Year, you're going to see some newer updates here. But let's say you're saying, look, I'm looking at Singapore now, and I'm trying to figure out what strategy can I go into, right? So on top there, you're actually going to see a link called Strategies, right? Now, in this link here, The idea behind is very simple, right? We're saying that everyone will have a different type of strategy, whether it's a trading strategy or an investing strategy. Okay. Now, what we have uploaded here so far are just trading strategies. Post New Year, you're going to see a new set of strategies, which are actually investing strategies, right? So for those of you who like long-term investing, you want yields or you want investment grade companies, what do they look like in Singapore? This screener actually does that for you, right? So after Chinese New Year, there's going to be some new features. I'll come on again on a Tuesday just to brief you guys very quickly how to actually use this, right? Now, under this strategies selector, you're going to realize that, so this is the trading one. You're going to realize we actually have a few here, but I just want to focus on some because Benny would have focused with you guys on very specifically trading strategies, right? So you're going to see uptrend support, downtrend oversold, uptrend overbought, and downtrend resistant alerts. Those are technical alerts or those are trading alerts, right? So if you're not a trader and you say, you know what, I'm a value investor, I want to look for stocks that actually have come down a lot, right? Where do I look for them? We actually call them rock bottom. So you can see with the magnifying glass with some money inside there, right? You're going to see rock bottoms, right? So these rock bottoms here basically look at stocks that have actually fallen. So we keep it simple, like let's not overcomplicate things, right? So post New Year, you're going to see some even cooler ones, right? We're going to show you companies that have a lot of cash, only cash, right? Cash hoarders, right? Companies that year on year have been growing, right? Rising stars, right? We will also have investment grade companies. So these filters are very data driven, which means that we use data to guide our investment decisions, right? Not not what our friend says, or so we actually want to build a diversified portfolio here. All right, Kelly, thank you for believing in us. Okay, do check out this website, do share this with your friends, do share this on your Facebook as well. It is absolutely free for you guys to use, right? So do check it out, sgx.equitystracker.com. Or you just go to equitystracker.com, click on SGX stocks, and it's going to be there. Now, of course, you're going to be wondering, hey, what's the catch? It's all free, right? Of course, as we develop this site, a lot of what we're showing here will remain free as long as the site is around. Of course, when we create even maybe more premium features, perhaps, right? Perhaps maybe in the future, it could be for a very small subscription fee for you guys to use, right? But we're going to continue developing this site. Please, give us feedback if you think that, hey, you know what, you can improve here, you can improve here. We will do that, right? So give us a message on Facebook or Instagrammers as well. Okay. So if you look at rock bottoms are super interesting, right? So rock bottoms actually look at 3-year high. From the 3-year high, how low have they dropped to today, right? So this is as of, let's say, this was actually, we update this once a week here. So you're going to see here as of 17th of January. So you're going to see, you don't need to update this too often because it's fairly, it's not going to change much. But if you click on this percentage drop here, it actually sorts by stocks that have fallen the most in the last 3 years, right? And you're actually going to see that if I go on the last page, there's 75 companies, So if you're a value investor, right, this pretty much narrows it down for you. You've got 75 companies here, right? Now, of course, for different reasons, now you're actually really looking for stocks that have been oversold, right? Now, as you know, right, it's been a challenging last 2 years for most companies to survive the pandemic. I think a lot of companies now are in a healing period, right? And of course, I think as we move into the endemic stage, hopefully, right, less hospitalizations, becomes just a common flu. We're going to see a rebound in some of these companies as well, right? So if that's your strategy and you're looking for a little bit of rebound, really this list kind of summarizes it for you. So do check it out if you're looking for certain stocks. So for example, one of the stocks that we have covered on this platform on our SGX Tuesday is actually Jabfa, right? Jabfa they sold their dairy business, but they're in the food business, right? And very specifically protein business, right? So chicken, they sold the brand, but they're still in the dairy business in China as well. Japfa, right? So we had the CFO that joined us last year, right, to talk about Japfa. If you have missed that show, do check out our Facebook and just Google for Japfa. You can watch that on replay as well. So if you click on this, for example, you're saying, oh, you know what, Japfa is down 35% from its 3-year high. It's now 61 cents. Let me find out what it does, right? So when you go in there, right, now what we have actually done for you guys is this, right? So you're gonna see that, you know what, Japfa is an agri-food company, produces and sells dairy products, protein staples, packaged foods, yada yada yada. It's all here, right? So you can read the whole thing here as well. If you click on show more or show less. Now we have this little bar here, right? It's very cool, right? You just want to show you where you are in terms of pricing. So even without looking at the price chart, we're already trading at a 52-week low. In fact, it's come down 30% from its 3-year high. So you're thinking, you know what? Does this company have fundamentals? The current PE ratio is 3. Okay, and its currency is in Sing dollars. Fairly high trading volume. The market cap is 1.23 billion. Okay. So if you can scroll down, we even have this nice little chart for you here. You can see that if I scroll all the way back, I think right now they're trading way below the IPO price, right? This almost looks cyclical to me. So if I was a trader, this would be a very nice curve for me, right? So I buy stocks that have got good fundamentals. When it comes down. Of course, wait for it to move back to 80, 90 cents, and then I take some profit and move back again, right? So these are price charts here. We've preloaded some technical indicators here for you. But of course, if you guys want to learn more about technical indicators, do check out Benny's session, right? I think every Monday, but I don't think next Monday he'll be on because it's the eve of the new year. But do check out his show where he actually teaches you guys about using technicals, right, to trade. Now, also very quickly, you can see the dividend payout. So straight away, Japfa here actually does pay dividends, right? In fact, they pay you twice a year. So if you can see, they were listed in 2016. So from 2019, 2020, or 2021 onwards, it looks like twice a year, right? They pay dividends here. Or actually, if this was 3 dividends paid out once, right? So so the announcement dates is something that you want to look at, right? So February and March, right? So well, February is coming soon, which is next month, right? So something to look forward to. Now, so if you scroll down, that's a very simple one. Now, what you can do is, I'm just going to go through what we call financials. Now, these financials are actually very, very important. For those of you who've actually attended our value investing program, or actually, if you want to find out more about fundamentals, go and check out our investing and trading program online. It is a pure online course, right? All for a big price of 95 ringgit only, right? You get to learn about fundamentals and also technicals as well. So head on to our website, do check it out. If you want to do some self-learning, especially during Chinese New Year, maybe you have a new New Year's resolution, right? Hey, I want to learn investing or take it a little bit more seriously. Check out our website at equitiestracker.com. Check out our investing and trading 101. Now, straight away over time, if you look at it over time, you can see that Japfa's revenue actually has been on the rise, right? Now, once you see a graph like this where the revenue and the profit and cash flow line is at the bottom, you're actually seeing that because of the scale of it, right? You're actually going to see that their margins are not really big, right? Because there's a big gap, right? If you see their net profit closer to their revenue here and their cash flow, that means they got a much higher margin business, right? So not huge margins, but they are still profitable, right? Okay. So revenue is 3.8 billion. Their profit is about 320 million. So you're looking at about 7-8% net profit or net margin that we're looking at. Okay, very healthy operating cash flow, 383 million now. So if you want to size up a company very quickly, it is from left to right. I think those of you who have traditionally been with Equity Tracker, you're going to realize that we normally read right to left. Okay, now we've tweaked it to a bit more standard, global standards. Okay, so it's left to right. You're going to see here from 2014 all the way to 2020, right? So all these financial numbers here are updated for you. You can use these as well, right? But to give an idea whether this company is profitable, very, very simple, right? So actually you realize they have been profitable. Sometimes its profit is up and down. I believe it's based on certain commodity prices. that they can't control, or that were good or bad commodity prices, right? But nonetheless, even through very, very bad times, they have still been profitable, right? During this period, as well, we've seen they always have paid dividends as well. So you can see based on the latest numbers, 3.8 billion. They make about 89% here, and this is their earnings per share. Now, in terms of cash flow, you can see actually their cash flow has improved quite tremendously over the last 5 years, 126 million to 383. Now, those of you who are not familiar what we mean by cash flow from operating activities, it means that it's cash flow, right, versus, we're not talking about net profit. Net profit is accountant's profit. Operating cash flow is actually your business profit. So very important, especially during COVID. A lot of companies close down, not because they can't make a profit, it's because they are negative operating cash flow, or they don't have enough cash to actually have reserves as well, right? So you also watch these investing numbers because you want to see whether they're investing, are they yielding better results here, right? So you can see in 2019, they made a fairly big investment here as well, okay? Now, if I scroll down a little bit, if you look at the balance sheet here, very quickly, I can size up, right? So the company right now sits on about 200 odd million in cash, right? You don't have to look at all the data. I'll show you some of the pointers that I do look at. I look at cash over short-term loans, okay? So you can see it's got 227 million in cash. It does use quite a fair bit of debt to run their business, right? And do they have long-term liabilities? Yeah. So you can see, although this company now, just to give you an idea, although fundamentally they do make profit, although fundamentally they do pay you dividends as well, and they have operating cash flow, which is fantastic. But probably one of the downsides, right? What may spook investors a little bit is the amount of debt that they have. So if you look at their total long-term liabilities, about 843 million. If you add that up with their loans, right? So you're looking at about 1.2 billion in debt, right? So just to give you an idea, right? So even though the market cap is 1.3 billion, you're gonna add back, that debt portion to give you an idea that there is debt in that company as well. It's not completely debt free. So now there is no perfect boyfriend, girlfriend, husband, wife. Okay, there will never be a perfect company, right? So you got to take the good with the bad as well. So if you think you like this agri-food business, but them being in this business where leverage is required, right? Because it's very capital intensive, then that's okay, right? As long as they are able to service their debt, they are okay, right? And they'll pay dividends as well, or add value to shareholders. So these financial numbers are there for you, right? They will be updated. Of course, these are updated based on annual reports. So I know it's 2022, but 2021 numbers are actually not out yet, right? Because we're only 20 over days into 2022, right? So you would be expecting them probably at the second quarter of this year, where you will be updated as well. Now, of course, if you also want to keep track of the company in terms of quarterlies, right? How are they doing, right? Every quarter. So we've actually put up a very simple graph for you to give you an idea, right? Are they doing better or are they doing worse, right? So you can see actually very recently, the third quarter, right? There was actually a loss, right? The revenue came down, there was a loss, right? Likely, right? Effects of COVID as well. So we're going to see whether this is going to be a long-term trend, and maybe that's what's driving prices down, right? So you want to see Q4 is not out yet, which is 31st December. Let's wait and see. Of course, if there are decent results that do come out, you may see a rebound, right, from 60 cents to maybe 70, 80 cents, right? But you can see what's happened since COVID, right? Actually, they have been doing quite well in terms of profitability. Now, some of these outlier profitabilities, you might have to dig a bit further, right? Now, because I do know this company a little bit, it's because they sold their brand, right? I can't remember, Good Dairy or something, their brand for milk, right? They sold it to another company, so they actually received an extraordinary one-off gain, okay? So it's not because their revenue, their net profits come down, it's just that it was a one-off gain, right? Of course, they do make 48 million, previous quarter 69 million, in normal times 50 million. So you have to find out whether this is an extraordinary one-time loss as well, right? Could be a write-down as well. But that'll be interesting to see, because we are seeing some good momentum here in terms of revenue as well, right? So quarterlies. Now, of course, if you can't see the quarterly format, you can always check it out in a table format that we've actually presented for you here. So you can see actually turnover generally has been on the rise generally, right? Just that net profit, they took a hit here as well, right? So you got to find out why. So that's for the quarterlies, right? Now, of course, if you do want to compare them to who are their peers, right? Who else can I actually compare them to? Actually, we have them here, and we sort them by market cap as well. So you can see actually by far the largest in this sector, right, or what they call farm products here, sorted by market cap, right? So you can sort by market cap, PE, or dividend yield, right? Wilmar becomes the largest here. Jeffy is right, maybe number 4 here. If you want to look at anything to do with food or food related, you're going to see who are their other competitors or which other companies that I can also potentially invest in. Now, this is sorted by how big they are in market cap. I could also sort them by PE as well, right? So PE is a reverse, right? You probably don't want to look at the highest one. You want to look at the lowest one. Or you can look at dividend yield as well, right? So which one gives you the highest dividend yield? If you're specifically dividend yield. Now, of course, you don't have to stick to farm products. You know, we have so many different sectors here that you can choose from here. But I just want to give you an introduction, right? This is absolutely free for you to explore. You know, don't forget to follow us on our Tuesday sessions where we will be using these sites, right? Because today is really just an introduction. We will be covering stocks. We will be using this site. We will be showing you how to use this site, and of course, the new features that are coming out, you know, post Chinese New Year. Okay. Now, of course, we have you know, similar companies here that you can compare them against as well. So, really, in a nutshell, even if you didn't know anything about SGX companies, if you use this tool here, it gets you a lot more intimate or closer to knowing some of these companies, right? And you can do it from the comfort of your own home, right? Okay. Of course, you can check out shareholdings as well. Who are the top 20 shareholders? It will show you. So one person owns 65% of this company, and then this is held by a nominee and everything else, right? So really, who is the top shareholder? So really, what you want to look at is the shareholding analysis, right? Is this stock, does it have enough float in the market for it to free float in terms of share prices, right? So you can see the balance float is actually fairly skewed, right? 2.73%. So which means top 20 shareholders own 97% of this company, or 97.27% to be exact. The balance float is actually 2.73, right? So no wonder, right, you're seeing the price range kind of trading that way, because maybe most of these top 20 guys actually they just buy and hold this company, right? They don't trade it. Of course, this is done once a year, right? We will be updating some little bit more notes here, and you can find out who these owners are as well. Now, of course, you also have your capital and dividend. Now, this is a very cool one. If you click on the capital and dividend info, we actually do a heat map for you. So the bluer it is, the more likely they are going to be announcing their dividends in that month, right? So you can see the heat map. This is all very cold, right? So you can see that generally the announcement of dividends happen during this period here and here as well. Okay, so this is a heat map. Now, if you're looking at this from your phone and you know the blue may not come out nice enough, go and check it out on your actual phone. I mean, if you're watching this video and you're seeing this screen, it may not look so nice, but go onto your phone yourself, right? Make sure you get on the Telegram, check it out yourself. You're gonna see the heat map. So we've actually done a heat map for all companies. So this covers the entire universe of SGX stocks, right? So it's a lot more than what you can use. So we will be running more of these sessions here. You know, maybe you know, give us a thumbs up or say hello, right? Give us a comment if you enjoy. You think this tool is going to be quite useful, and as we move along and cover companies, we will be using this tool as well. So you can do it from home as well, right? You can do it from comfort in your own home. You can follow us, and we're going to be covering some good stocks here, right? So for those of you who actually do want an alternative to, say, Malaysian markets and want to get out of ringgit-denominated investments, right, or alternative to ringgit-denominated investments, I think SGX serves a very good platform, right? Down south, right? Very close to Malaysia, right? So if you guys like what you've seen so far, you know, give us a thumbs up, or you know, give us a comment lah, so that I know that you guys are there, right? Okay, right there with me. Now, of course, if you want to find out who the directors are as well, you can see who they are. they're all right here as well, right? So when was it last updated as well? All right. So there's going to be more stuff that we will be putting on in here. Now, of course, that's from a search basis, right? Of course, if you actually want to look for specific stocks, let's say, I search for Keppel, right? You're going to see here, you got REITs or you got stocks as well. So the search is also been factored in to give you an idea that, this is REITs and this is stocks, right? So it depends what you're looking for. So you go to Keppel, right? And it's here, right? So of course, we both have technical and fundamentals, but stay tuned, right? Thanks, Raymond, right? Yes. Now you can also safely invest in SGX using equities tracker methodologies, right? Yeah, do check out the site. It's very easy to use. We'd love to hear what you guys think in terms of feedback. Here's the interesting thing as well. These prices here that we are showing you is actually delayed 15 minutes as well. So this is as close as you can get without actually having an account, right? Now, I think investing in Singapore is so convenient now. You can go online, open a broking account online, completely online, and the market's at your fingertips, right? Okay, thank you, Kakok, Yongfat. Thank you. Thanks for supporting us. Do check it out. So there's a lot of cool stuff here. Of course, we like to build a community of all you guys who follow SGX around here. Just now, I know Kelly asked about Hourglass, right? So I'm going to search Hourglass here, and we're going to do a very quick analysis of Hourglass. Okay, so for those who don't know Hourglass is actually a watch retailer, but not just any watch retailer. It is a higher end watch retailer, right? So we have not yet completed this, but we do have something interesting, right? So if you remember, I covered high-end watch retail last year, and they were one of the shining spots, right, in the pandemic, right? They were probably the only retail segment that actually grew, not shrunk, right? Because everyone was stuck at home, no one to do. Generally the rich got richer, right? And they started buying luxury watches, right? So a lot of these guys that are in this business, they were sold out, right? You couldn't buy a Rolex, right, in Singapore. So what happened here, you can see in this business in terms of the retail space, is also fairly high barriers to entry as well, right? Not anyone can be a authorized Rolex distributor, right? So if you missed that session, do check it out on our Facebook. You can watch my analysis there. But Kelly, just to give you an idea how I would analyze, so I'll jump straight into financials, right? You can see, right, 2020, 21, fantastic numbers, right? Fantastic year for them. Now, if you look at their business itself, you want to look at what is actually their operating profit, because whatever sale of those watches or timepieces, net their cost of sales, which is what their cost is. So this really is actually their revenue, right? 100 million. So you can see how highly profitable they are, 82 million, right? So very, very high margin business, right? Just selling timepieces. So 82 million, having maybe 12 locations, right? You don't even need that much, right? So can you imagine the kind of profit generated per store, right? It's immense, right? So this business has a very high value mode, okay? What I define as high value mode. Now, if you look at the operating cash flow, because you're not going to take my watch if I'm a retailer and then say come back in 60 days to pay me, right? So they have no receivable issues, right? So you can see their cash flow is through the roof, 174 million, right? I've always been quite bullish. I like this space. It is a very kind of, investors kind of don't look at this space too much, but I think it's a very interesting space. You can see they also have a lot of cash, right? So they got 250 million in cash, short-term loans 105 million, and 71 million long-term liabilities. So they are probably what they call a net, okay? No cash, no extra cash, or no cash surplus, no cash deficit, right? So you're looking at this business, it's a fairly straightforward business, high mode, right? Now let's look at the quarterlies, right? How well they're doing, right? So you can see, wow, look at this, right? They've done even better in the third quarter in the middle of a lockdown, right? Amazing, right? So net profit 62 million one quarter, so they're probably close to hitting more than 140 million profit probably for 2021, right? So they're already here. You can see actually first H. Also, this first half, right? So I think second half they probably if they repeat the same amount, is it's very sizable returns, right? So if you look at the comparison as well, who do you compare them with? Of course, it's Cortina, right? Cortina and Hourglass, those are the two largest guys that are in that luxury timepieces space, right? So you can also check out their competitor. But okay, just wait till the end. I'm going to share you guys something cool as well, right? Okay. And you can see, Hourglass is 1.3 market cap. Cortina is half of that, right? So maybe should you be investing in Cortina instead, right? Will it get to what Hourglass will be? Okay. Then of course I'll check out the shareholdings. Who's the largest shareholder? So you can see this balance flow is actually a little bit better than Jaffa just now, right? 8.4%. But nonetheless, I think it's still very majority owned by the founders, which is 48%, which it's not going to move, right? This stock. So TYC Invest Pty Ltd, right? 48%. They own this business. Let's say if they pay dividends. Okay, now let's look at the heat map. Very clearly, the announcement date is July and November, right? Without looking at the data, I can tell it's July and November. So you can see July, November, August, November. So July, right? So the more times it hits July, the stronger the heat map is. So it's very easy. Okay, so then of course if you want, you can go and check out the directors, can do some research. Now, of course, this site won't have every single detail you have, but it's a good start, right? It's a good start for you to start researching more. Okay. Yeah, Kelly. Last year, if you guys remember the show that I did cover Hourglass and Cortina, right? So if you're gonna watch back again and look at my research, you can. Now, recently what we've also done on Equities Tracker, and we're starting now, so do check it out. We started our little Medium page, right, which is what we call articles, right? So if you click on these articles here, now really this is a very raw stage. So if you're talking about Hourglass and Cortina, we're still cleaning up. We actually have this we published earlier this year. It's called The Value of Time. So if you go to Equities Tracker, you click on articles. We do have one on Cortina and also the time industry. So you can actually you can follow us on Medium as well. You can go and read it. Find out what makes this space tick. Okay, find out what makes this space tick, and you can read it. Now, of course, we have the full research report. You can download it here just by clicking here. We'd just like to get some of your details so that we can send it to you as well. Okay, so check it out. We're starting our article section as well. So very short articles, just to keep you guys informed as well, right? So follow us, right? There is content there as well. Okay, good question here. DT, yes, working on it. Our tech boys are working very hard to get these things out. So we hope this serves as a new model for us to replicate other countries as well, right, DT? I think this is just the beginning. I think I'm very excited to what this can become as well. I think there was a question earlier regarding whether we will cover SGX stocks as well in our portfolio. Yeah, for sure. Definitely, that is definitely in the pipeline, right? So for those of you who have been following us and been our client as well, we'd like to thank you very much, for supporting us on our journey to making sure that you are an informed investor, okay, or you make informed investing decisions. And we will also continue to support you on your journey, right, your investing journey as well. So do follow and like us and support us as well. So we can send this link if you're on YouTube or on Facebook, we'll send this link for this article. If you want to find out a little bit more about Cortina or Hourglass, actually it's quite a good write-up. Actually, it's a 2-part write-up. Okay, so wait for part 2 as well. We will posting it. Just bookmark the link, right? If there's new articles, you can check it out there as well. All right. Let me see if I missed any other questions. Look, there's a lot of stuff that we are definitely working on, and I'm excited about it. You can see from my face, excited about it to get this going, right? Let me see. Yeah, Mingku, right? Will Equity Tracker site be providing a portfolio site? Yes, we have, or we will be providing a portfolio site as well. Hopefully, right, if we can work on a model portfolio, that would be great as well, or an index of some sort, or value stocks in Singapore, right? So I think investing in this day and age now cannot no longer be geographically bound. I think most of you guys are also in agreement. It doesn't matter where you are, you can invest from anywhere, right? So whether it's US, Germany, Singapore, anywhere, I think we need to be very geographic agnostic, right? It doesn't have to be only the home country that we're in, because certain things that are not available here, for example, like Cortina Hourglass, which I do like, actually we don't have something similar listed on Bursa. So I think SGX does bring a different proposition as well to give an idea as well. Of course, we love to cover other markets as well, right? For you guys, right? But just keep following us, like us, share with your friends the site, and of course, don't forget to sign up for the SGX Telegram. I think that is quite important. I do check on it just to get a pulse on the SGX market as well. Put that on the Telegram. If you don't have Telegram, download it. It's a free app. It works exactly like WhatsApp. All right, look, it's really it's Chinese New Year, right? So next week, right? So I've been online speaking to you guys for an hour. I hope you guys enjoyed yourself. If you kind of enjoyed this, give us a thumbs up, or and say, yeah, we are excited of what is to come. Every week, either myself or Benny, or we have a guest that will warm you up on the Singapore market as well, right? So don't forget to follow and like us as well. If there are no other questions, or if you guys have anything, comments, right, please put in the section below. Yes, we have posted the link for the article as well, so do check out that link as we progressively fix the site. Okay, it's not perfect right now, but you're going to see some content spilled in that will be published onto that platform as well. All right, look, I wishing all of you guys here a very, very happy Chinese New Year. I do have a few quick announcements. I think those of you who are following our lab sessions, this Thursday we do have a lab session. We're going to talk about capital changes. That's happening on Thursday at 7:30. For those Master Value Investing Program students, right? Those of you very serious about investing, I'm going to be on privately with you via Zoom. Of course, those of you who are on the crypto section as well, Andrew and Benny will be on at 9 o'clock, actually on 9:15, with you on Thursday as well. Those of you wondering why crypto has crashed 50%, right? So important to be geographically agnostic, also important to be asset agnostic as well, when we're building our long-term portfolios. All right. If there are no more questions, thank you very much, all of you guys, for being online with me. Wishing you a very prosperous and happy and a very safe Chinese New Year. Make sure you guys wear your masks and follow SOPs. I will see all of you guys after the New Year. All right. 恭喜发财, Happy New Year, and good night, and bye-bye.